traders, thanks for joining me on this very important Wednesday afternoon market recap. Obviously today we've seen a big move to the upside. The Dow Jones Industrial Average closed up very close to 240 points on the individual daily candle. The S&P 500 had a pretty big move as well, up 25 points. And the Nasdaq, the market which has been the most neutral of the three, was up 62 points in and of itself. I'm going to sit down maybe over the next 10 minutes or so and speak to you very candidly about what is going on in the market and why there is this continued sense of volatility taking place in this very stagnant and range-bound market. We moved into the week this week very neutral. It was very hard. We were essentially in the middle of no man's land. We were right between the support level down here, about 17,680, and we were also right in the middle of this resistance level, coming in up here just over 18,170 points. We're very neutral, very optimistic at least, for at least a continuation to the downside. We saw that on the Monday and Tuesday, but as I just alluded to, this Wednesday has resulted in a very big bounce off from this, once again, macro support area. Is this going to be the candlestick which sets up a multi-week, maybe even a multi-month move? I'm not too sure yet. As I said, I'm going to speak to you candidly, and first of all, what I wanted to mention is the fact that we've done this over and over again since March 2015, yet the market has failed to produce a new bullish trend. If you take into consideration this most recent push, yes, I can make the argument that it has occurred off from this support level. Just look to the left on this chart and have a look and see for yourself just how many similar types of candles we have had since March 2015. What I'll do, I'll just count them for you right now. We've had one almost just here, a second, a third, a fourth, to a degree, a fifth right here. We've had definitely a sixth, a seventh, an eighth, even a ninth. This is going back 3.5 months. So to sit here and to say that this is a reliable signal, to say that, look, the market is getting out of this range-bound market, it's really a stretch of the imagination at this particular moment in time. I'm open because we are still range-bound and we're stuck very, very neutrally between this resistance and support area. Outside of the fact that the market rallied quite considerably today, the S&P 500 has had a very similar type of candlestick. This range-bound type of situation or scenario which we find ourselves in is a lot tighter than that of the Dow Jones Industrial Average. The percentage range is quite less, but you can see once again this particular candlestick has happened and occurred over and over multiple times over the past 3 months. All I need to go back is reference these big white day, long day Maribosas just to see that the net movement, as I said, as at the close of yesterday, was negative year to date on the Dow Jones Industrial Average and slightly positive for the S&P 500. The Nasdaq at this particular moment in time is a little bit of a different story. If I change to the yearly type of candle, this has been the most bullish of the three markets. We are up 340 points year to date on the overall Nasdaq market itself, but we're still stuck range bound essentially. We haven't broken out of resistance and we've struggled to break above it for over a month right now, since late April 2015. Yes, we're starting to see a good variety of bullish candlesticks at this resistance area. It is leading me to believe that this may be the driving market, possibly if we take into consideration where the Dow Jones and the S&P 500 is. But at the same time, it's not enough confirmation. All that is happening at this particular moment in time across all three of the markets is continued volatility. We're seeing volatile days to the upside, followed by net negative moves to the downside, almost counteracting to a degree all of the positives which are seen, for instance, in today's candlestick, yet we are struggling to define ourselves in a nice trend. That is very, very warning and something which should be taken very seriously if you're here as a swing trader looking for really good swing ideas and trade ideas out there in the current marketplace. Now, obviously today or this week, we've been triggered into a few trades. The one which has personally hurt me the most, and I'm going to speak from the heart on this particular trade, is the Caterpillar setup. Yesterday, I was in this up until a couple of cents. I mean, we had this nice shooting star candlestick. We saw a very big day on the Tuesday. Today, I'm stopped out at 87.73 on the Caterpillar short trade. It's okay, you have these losing trades from time to time. Again, I'm going to be brutally honest and candid about this. It was a great trade setup. Risk and reward ticked all of the boxes. But in this particular trade setup, it just didn't work out. I'm not taking it personally whatsoever. It is disappointing to see this most recent bullish pop, but it is to a degree expected after this one candlestick here on the Friday. I was still optimistic, so to speak, that we were going to crack 84.61. It didn't happen, as you can see on the Monday, the Tuesday, and the Wednesday. We've pushed on up higher, but we are at this resistance level once again, which is peaked out at 3 times throughout the month of May 2015. Looking at a long-term buy on Caterpillar, again, I'm really struggling to get behind one unless we can break above $90.77. So at this particular moment in time, I'm quite flat in regards to market setups, trade setups, and my overall outlook on the market. To go full circle and to go back to these markets, once again, we are right back in the middle of the range. We haven't broken out. We're still in no man's land. And really, you have to be, I guess, really precise and critical of the trades which you want to get into. There's really great times in the market to be active in the market and to have a lot of trades open based on which direction the market is trending. There are other times when it's best to sit back and let the chop sort of unravel and just let it do its thing. At this particular moment in time, we're getting whipsaws up and down all over the shop. Whenever the market seems to be breaking down, again, we traded into a logical area of support, but we're getting to these support levels and we're seeing very, very quick bounces. Is that a sign of strength? Or is that just a sign of continued volatility in this suppressed type of stagnant market, which we've seen ourselves or found ourselves in since March 2015? At the moment, this is my approach to the market. I'm simply flat at this particular moment in time until we get some really clear signals, some definitive signals which with some really good risk and reward types of movements on the overall market and the structures themselves before, once again, I'm going to be jumping back aggressively into this particular market in time. It's best at this particular moment to sit back, really refrain from trading, and to really pick your trades if possible. And if you do want to enter into the trades, with the best risk and reward trade setups, and the ones with just the best trade setups in general. Now, moving full circle once again, I've referenced Caterpillar. Unfortunately, that didn't play out. IBM, for instance, at the beginning of the week did. We did hit our 165.08 entry. The second stock which I want to mention is the Apple trade. With the Apple trade at 128.78, right now it's bounced right off this location on Tuesday. We're back pretty much neutral, 128.88. Well, we are down, 10 cents on this Apple trade. But this signal right here is more so, or somewhat of a morning star reversal type of signal, again in the middle of no man's land. You can see how we've got clearly defined levels of resistance and also support. So I think a lot of people are going to get carried away on this particular day. I mean, they'll read the news headlines and say, look, the markets are up, 1.5%, for instance, on the Dow Jones Industrial Average. They'll have a look at the long day candlestick, but they're not going to take into consideration all of the other types of candles we've seen at the exact same location and what it has meant soon after. I mean, in the coming days or weeks after that, we've oftentimes given back all of the gains by the market and we've found ourselves back at our original starting place. I can only imagine right now that Apple is going to be in a similar situation, maybe later in the week, if not next week. You get these very, very volatile periods in the market where you get these net negative movements or you get these little noisy bounces against you before the actual trend, or at least the range-bound move or the cycle itself resolves itself in the overall direction. Right now, as we look at Apple, once again, we're right in no man's land, as I just alluded to just a little bit earlier. And right now, there isn't any overwhelming signal to go long or short at this particular moment in time. I've addressed the candlesticks. They are somewhat bullish to a degree, but they can be written off very, very quickly in the event that we see, a down day tomorrow, even writing off another 240 or 230 points on the Dow Jones or even on the NASDAQ, pushing back down below that level, which I referenced earlier in this video. If you are in the Apple trade, this is what I would say. I would more or less be wanting to sort of limit exposure all round to all of the stocks out there, which you may or may not be in. So I'd be putting my stop right here at 129.57. And I'd simply be waiting for a better time to enter into the market. That was really our theme for the week ahead. If you cast your mind back to the analysis class, we were saying, look, we are completely neutral in the markets themselves. We have limited downside. For instance, if the market does want to roll over earlier in the week because of this green box, we have our support area here. And we weren't too comfortable until the Dow Jones, for instance, started breaking 17,550. And also on the S&P 500, if it started to move below about 2,064. None of those did confirm. And as such, once again, sorry for the third time, we are bouncing off this macro support area. Again, I want to speak about this as candidly and openly as and just transparently as possible, because I'm in the same situation as you. Here I am looking at trades, trying to get into trade setups or trade setups worthy of our time and money. And whenever we get to that stage where markets or the individual stocks are looking at really nice setups, you get the next volatile move in the market, which again is just representing the net zero or the net negative or the net positive movement, giving us a net movement of zero. Sorry for putting out that terminology just like that. I just stumbled a little bit, but you can see my thoughts on the market themselves. We do not have clear signals. The market is highly volatile. It's news-driven at this particular moment in time. And as such, I'm really refraining or at least honing back from individual trade setups and just waiting for a better time to enter into the market. The one other trade which I wanted to pay attention to was the Netflix trade. Now, I can say I missed out on this and I'm happy. Well, not so much happy. It would have been great to get into this trade. But I was really concerned on the candlestick on the Tuesday. Now, once again, look at the volume surge come back into Netflix on the Tuesday the Monday was the candlestick which had the bearish type of counter movement. Tuesday we broke out above 634.30. I didn't take the trade, but again today we're up at 671.10, as high as 690. A big move on Netflix. In retrospect, everything is much easier, but given the market moving into the week where it sat, it really felt as though this stock in particular was almost set up to set up a whipsaw, and it really looked as if that was going to be the case on the Monday. But as you can see, quickly negated on the Tuesday and Wednesday, an explosive move to the upside. This is in anticipation once again of the stock split, or the upcoming stock split, I do believe. And as such, we finished Wednesday's candle with somewhat of a shooting star. So it would have been a very nice short-term trade, which is fantastic. It would have been a great trade setup, a great trade to capitalize on. But I can sit here and say, once again, in full transparency, even though I could make the argument for a bullish trade, I did not take it based on what the market was setting up earlier in the week, or moving into the week, which is just, as at the close on the Wednesday afternoon. So I just wanted to make that very clear on Netflix. I've had a lot of emails as well from students who said, look, I took the trade on the Tuesday, and I say, congratulations for that. You have a higher risk tolerance than me. And they've done very well for themselves. But for me in particular this week, it's really been quite a disappointing week so far, just based off that Caterpillar trade setups, just speaking from my own personal, setups on these individual trades. Frustrating and annoying, but I will address the losing trades, as I will always address the winning trades as well. It's part of the business which we operate in. It is a business trading the stock market, and from time to time when you suffer losses, I just call it a business expense. That's how I look at the market these days. So unfortunate for that. Outside of that trade setup itself, I mean, some of these other stocks haven't really done all too much, especially in the face of such a bullish move. I mean, I can go into detail on the Amazon type of trade setup once again. Not doing a whole lot there. Let me just take these annotations off my screen just for a moment. You've got the Boeing Airlines trade, which once again is just plateauing at the support area. Remember the CVX trade, which we spoke about over the weekend? That is one which is still on my radar, definitely. It's something which is really sort of humming and drumming into support right here. And we're starting to get the signals. Although today was a positive day, so to speak, it was a bearish candlestick, and that even adds to the bullish trade setup, because again, you can place your long trade, and it's a really good risk and reward on the CVX trade setup. So I'm happy to address that and possibly link into that later this week if it does confirm, and if these markets push back up into those resistance levels on the overall market. Google, again, it's just completely plateauing at this level. Goldman Sachs pushing up a little bit higher. The other trade outside of these trades, which I've just mentioned, is Tesla and Walgreens Boots and Alliance. Walgreens, you can see my hesitance on shorting this stock at the beginning of the week. We had varying levels of support. That has sort of run its course right now. We're starting to see a bounce, which is interesting. So that is definitely still on the table. But the Tesla trade, I mean, we did get into this, and it's pulled back a little bit today on the daily candlestick, which is fine. So we're just pulling back into this very neutral type of trading situation. It was very similar to that of Netflix. Very similar type of trade setup, very neutral. Nice little pop to begin the week. We've pulled back. This just looks like a bull flag setting up right here, which will resolve itself to the upside. So I hope I've covered all of the points which I needed to cover at this particular moment at time. Obviously, a lot of people right now are excited. Bullish optimism once again flowing back into the market, up 236 points on the Dow Jones. I wouldn't get too carried away or too complacent on this one particular candlestick. I think I've made enough points so far to say that, look, it's probably going to be, unfortunately, another false signal. It's more so a day trading market at this particular moment in time, especially in regards to volatility. And once again, we've just got resistance, which has been a very, very severe problem since late February, early March 2015, where we've just run into it once, twice, 3 times, 4 times, 5 times. And have we broken out on any of those 5 occasions? The answer is no at this particular moment in time. No. So we've still got a lot of overhead resistance to contend with. Again, be selective, in your trade setups. Even refrain for just a little bit. Take a little bit of a hiatus if needed, because it's really not a conducive time to be swing trading the markets, especially with this volatility and these lack of swings in overall trend direction, given that the market is range bound and volatility is continuously picking up at this particular moment in time. So I'll leave it at this on this Wednesday afternoon. I'm sure I do have a lot of emails which I need to get back to people with in regards to probably that Caterpillar trade, which is fine. I hope this video at least has addressed that particular trade setup. Outside of that, if you want to schedule a call with me, that's fine. Let me know, success@pivotpoint-trading.com. I'll be back most likely on Thursday, because I am expecting somewhat of a big day either to the upside, continuation up to this resistance area, or even a candle. This would not surprise me whatsoever, just to see this bullish candle completely negated on the Thursday's trading session. I mean, that's just what to expect. And it should come, or it shouldn't come as a shock whatsoever based on the volatility that we have seen and the number of 200-point up days followed by 200 or so point down days. It's quite incredible at this particular moment in time. So I'll leave it at that. Have a great Wednesday evening, everybody. I'll see you tomorrow. I will make a video on the Thursday afternoon just to address this mania which is occurring in the market. Have a great evening, everyone. Goodbye.